Hi everyone, Evan here at the Chronicle for Wednesday, September 7th, 2022, where the future starts today. As expected, and as I'm sure many of y'all have heard by now, Bank of Canada raised their overnight rate by 75 basis points. My reason for this video though, I'm having a look at the statement here now, and it looks like even though we're already in a recession, quantitative tightening and rate hikes are going to continue here for some time. By the way, as you look at the statement, anything that's in red is from the previous statement that's taken away, and anything in green means it's been added on to the statement. So red taken away, green added on. Okay? First line that caught my eye, again, we're only going to read the parts in green or the parts that have no color attached to them. Have a look here at line 7. Global inflation remains high, and measures of core inflation are moving up in most countries. In response, central banks around the world continue to tighten monetary policy. Next here, have a look at line 11. United States has moderated, although the labor market in the US remains tight. China is facing ongoing challenges from those shutdowns. Commodity prices have been volatile. Oil, wheat, and lumber prices have moderated, while natural gas prices have risen. Again, are they forecasting a recession? Are they forecasting a serious inflation slowdown? Again, it doesn't really seem like it. Next, let's have a look here at line 13. In Canada, CPI inflation eased in July to 7.6 from 8.1% because of a drop in gas prices. However, inflation excluding gasoline increased, and data indicate a further broadening of price pressures, particularly in services. The bank's core measure of inflation continued to move up, ranging from 5 to 5.5% in July. Surveys suggest that short-term inflation expectations remain high. The longer this continues, the greater the risk that elevated inflation becomes entrenched. Again, does that look like a rate hike slowdown to you? Doesn't to me. And then have a look here at line 15. Again, we're only going to read the parts that are in green or have no color attached because that's from this statement, okay? The Canadian economy continues to operate in excess demand and labor markets remain tight. Canada's GDP grew by 3.3% in the second quarter. While this is somewhat weaker than the bank had projected, indicators of domestic demand were very strong. Consumption grew by about 9.5%, and business investment was up close to 12%. With higher mortgage rates, the housing market is pulling back as anticipated, following unsustainable growth during the pandemic. Again, do they see the recession? No. So rate hikes will continue. I mean, the only thing you can latch on to say that they may stop rate hikes a little bit sooner, have a look at line 17 here. The bank expects the economy to moderate in the second half of the year as global demand weakens and tighter monetary policy here in Canada begins to bring demand now in with a lot more with supply. Maybe, but based on what they've said previously here in the statement, they don't really see a recession, so in my opinion, that doesn't look like it's going to stop anything. But yeah, I'll leave the statement on screen here for you for another 30 seconds to a minute for you to read it over, what's added and what's subtracted for yourself. But again, just looking at it on the surface, the forecasts for further rate hikes into the end of the year are spot on. That's all I can really say on that. Again, don't want to waste too much of y'all's time. Smash the like, leave a comment, subscribe, follow me on Twitter and Instagram at the Chronicle. Y'all take care, everyone.